What's going on, YouTube Nation? This is GB Merce. This is my first stock that I'm going to discuss. This is one of my favorite stocks. It's a fast food stock. It is growing like crazy. It's an affordable stock and has proven growth. So this is one that you don't have to throw a $10,000 investment in and start growing like crazy. It's not $200 a share. It's not even $100 a share. It's not even $50 a share right now. So I really want to show you guys this stock that gives off pretty good dividends. I will show you the dividend history. I will compare it to the S&P as well as the Dow and the NASDAQ and even McDonald's and Yummy Brands. So I will show you a stock that you should probably throw some money in because I can guarantee it's going to grow just by looking at the charts and how it's done against the S&P. So I want to show you guys this real quick. This is Wendy's. So I don't know if you guys know about Wendy's, but it's a really good fast food stock. It has been growing like crazy. I have money in it on my M1 finance account. It is growing like crazy. If you put money when the recession hit, you would be rolling in cash right now. If you even had 100 shares right now, you would be making dough right now. So let's talk about Wendy's. Let's just started trading on the 17th at $20.09 a share. And it saw a downtrend of 28.7 since the beginning of 2019, blah, blah, blah. There's a rally. And look at the stock. It has gained 14.34% over its value in the past year. It has beat expectations. Its earnings are up to 38% a year at 0.18. Its dividends have increased. Its revenue has increased as well. I can show you the revenue earnings. Revenue generated by Wendy's in June 2019 surged by 6% to reach $435.5 million. This is high compared to the $411 million. So this is a growing stock. It's expected to grow by 25.91%. Look at this, 13.02. The company also has a recorded revenue of 1.64 billion. Billion, okay? So that's one thing. Let's talk about this real quick. So Wendy's revenue and profit beat on new burgers and higher royalties. Wendy's reported better than expected quarterly revenue and profit. The U.S. burger chain benefited from higher royalty fees and launched its premium burgers of avocado, bacon, barbecue chicken. Recently in the news, they also put they're trying the fast food style. So I just want to let you know it's better than expected quarterly revenue. This is CNBC making the comments. So here's a few things. Total revenue. Look at this. Boom. Okay, Wendy right here. Beating by 11.11 cents per share. Total revenue rose 7.4%, beating the analysts. So that's pretty good. Profit margins at restaurants operated the companies rose 15% compared to 13.9%. Wendy's same-store sales rose 1.3% in North America in the quarter, largely in line with the estimate of 1.28% growth. Net income rose, okay? Net income, okay? That's huge right here. So that's one thing you want to look at. Let's talk about the global growth of Wendy's, not the menu, but Wendy's. 6,500 Wendy's restaurants right now in the United States, in 29 countries and U.S. territories worldwide. So they're going to be expanding. New market expansion, okay? They're going to expand, okay? Not only that, they give off a dividend, okay? They're rewarding you for investing in these guys. I have all the sites up here. I'm going to discuss each of them, and I'm going to show you who they're beating right now in the past 5 years and growing. So this is something that you need to look into, not only when you invest in fast food stocks, but the growth, the price per share, the dividend, and is it affordable, and do you think it'll grow? Right here. So this is the Motley Fool. Very reputable site. I will go over that in the future. Just discussing websites that you want to look at. Here's their interactive chart right here, just growing. Okay. So I just want to show you price charts in the past 10 years. Okay, now this is right around when the recession hit, and it is growing. So imagine if you put money right here in 1999 when it was growing, and now look at this, $20 a share. It's only going to go up. I mean, you know, they've just done phenomenal. Okay, so you know, this is just one thing. The Motley Fool discusses this. Okay, so here's just some interactive charts on the Motley Fool, just by talking about, just by them just discussing that. Right here is the people hit a panic button right now about the fast food. That'll fix itself, so don't worry. Here's the Wendy's NASDAQ interactive chart. Okay, here's some financials. Let's see, I'll just show you some other information. Oop, I guess that one didn't want to show, but here's just in the news right now. I know people are hitting the panic button right now. Dividend yield is 1.9% or 40 cents per share. So, you know, some of these, I mean, here's some of the information about Wendy's right now. The breakfast, I know everybody freaked out about that. But let's talk about the nitty and gritty. Wendy's right now. I'm comparing it against the NASDAQ in the past 5 years. Look at this right here. Okay, it took a hit. Growing. Up how many percent? 135% compared to NASDAQ at 81.21%. That's pretty huge, okay? This is a fast food chain that is on the rise, and people are throwing money in like crazy. I put money in. I have stocks in it in my M1 Finance. Like I said, you guys might want to consider this. I will put another comparison. McDonald's, okay? McDonald's, past 5 years. Wendy's has beat McDonald's, okay? Is that not crazy? 166% to 130%. Even it was at 171%. And this is right when people hit a little bit of a panic button about the breakfast. That'll go back up. But look at this. This is beating McDonald's, okay? Wendy's is beating McDonald's right now. Here's another one. Yum Brands, okay? 5 years. The market cap is $34.87 billion in Yummy Brands. Wendy's is only 4.64. I mean, Yummy Brands is way ahead of them, obviously, and the price per share is way more expensive. But look at this. Wendy's has beaten Yummy Brands, okay? And everybody wants to know who else. The S&P. The S&P, the past 5 years. Wendy's just beat the hell out of the S&P. 135% in the past 5 years versus the S&P 51.67%. That is disgusting, okay? That is disgusting. Everybody wants to compare themselves to the S&P. This is a big indicator in the past 5 years how they do against the S&P. This is a fast food restaurant. People are always going to be in a hurry and get fast food. So this is something that you want to consider buying. Okay. What else do we got? The Dow Jones Industrial Average. What do we got? 5 years. Ooh, somebody beat the Dow. They were up 135.68 to the Dow's 59.06. Okay, 19.42 right now. Okay, that's what it's at. Let me just show you the dividend history at Wendy's. This is going to grow. I'm telling you guys, this is going to grow and grow and grow. So it gives off a quarterly dividend. Of course, advertisements in the way. So look at this. Going up, 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 up. It's growing up, up, up. See, this is these are the type of stocks you want to do. It's going to grow, okay, first of all, and the dividends, the price per share is going to go up, and the dividends are going to go up. So this is something you cannot pass up on, okay? This is a stock that is going to grow. I mean, think about it. You just throw 100 shares in, you just throw X amount of shares. It's affordable. I mean, look at how much McDonald's is. Look at all these other stocks that are super expensive. This is $20 a share, okay? That's not bad at all, and it's going to grow. So this is something, if you are young, throw some money in now, okay? Again, I'm not a licensed professional, in business or finance, but I'm just telling you, reading the S&P is huge if you want to have dividends and if you want to make money off of dividends. These dividends are going to grow over time, okay? When you see things, okay, like this, current strength, this is another thing, bar chart, strong, 72% buy, okay? Trendsetter says sell, everybody else says buy, 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 buy. Look, everybody says buy, okay? 72% buy, that's pretty impressive. And these are some of the pickiest people in the world making, just analytical decisions. Last month, 88% buy. Yesterday was 72%. Well, obviously, and 56% because people are freaking out about the breakfast. The breakfast will be fine. I'm sure they'll adapt to that. They're trying to keep up with the McDonald's and everyone. Look at this. Boom. 88%. Okay, that's probably going to go back up. So let's go back to the dividend history. Okay, so 0.10 is a dividend. This has increased since the recession. It's going up. When you invest in stocks, okay, company stocks, okay, there's some, that are just mostly focused. There's exchange traded funds, and there's, stocks that are mostly focused on income, but this is going to grow and it's giving off dividends. So you're going to see a growth stock, and this is going to grow and it's going to give off dividends. So they're going to reward you for investing in them. This is something that if I were you, I would consider. I would study it a little bit more if you have questions. This is something that you guys might want to consider buying. I did a lot of studying and research. Obviously, I live in Ohio. I'm not trying to be biased just because I live in Ohio, but this is a stock that you cannot pass up on if you want your money to make money. You just set it and you forget it. I'm telling you, these guys do a fantastic job at Wendy's. They work very hard. Most of the facilities are cleaned. I'm not really a fast food guy, but when I go on cheap meals from working out, I love the double cheeseburgers from Wendy's with mayo and all that. It is amazing. Their service is fantastic. They have expanded so fast over here in Northeast Ohio. It is insane. You guys really need to do your homework on this. I'm telling you, this is something you can't pass up on. Is a fast food restaurant. Again, people like to eat. People aren't very disciplined with eating or meal prepping. So where do they go? They go to Wendy's. So I'd like to thank you guys for watching this video. Make sure you like, comment, and subscribe. Let me know what you think of the Wendy's stock. Again, let's go back over here. I'm going to go back. I'm going to go to the Wendy's stock history, and we're going to see this right here. Okay, when this recession hit, and it's just going back up. So this is something you cannot pass up on. It's just growing and growing and growing. Your money is going to make money. This is an investment in yourself. This is something that will pay off in the long run. I could see that jumping up 40s and 50s easily just by studying the trends and the way it's beaten the S&P. again, thank you for watching this video. If you have any questions, let me know. You guys have been fantastic in the last video. Just make sure that you like, comment, and subscribe again. And this is GB Merce. I'm hoping you put some money in Wendy's. I really would. I highly consider it. Especially a lot of us are paying off student loan debts. They're paying off car payments or credit card debts. $20 is not a lot to put in. Even if you put in like, I don't know, $200, $300, you at least got 10 shares. That's going to grow over time and at least give you some dividends to make you a happy person in the long run. So again, you guys have been fantastic on this channel, and you guys have a good one. My next review will be on some of my rates. I will also be doing a review on a few cashback cards so that you can have your money that you put in at the grocery store or your local supermarket, have your money actually make you money, and you're going to get rewarded for some money. All right, you guys have a great Wednesday, and have a good one.